Alright, hello everyone. So let's do a short video. Now remember, if you're following me on Twitter or whatever, Facebook or whatever, okay, as you know, I'm at a congress, right? So I was on a flight on Wednesday, so I couldn't trade on Wednesday. Thursday, Friday, I was at a full day congress. I still am actually today as well. It's actually a spiritual congress. It's, spirituality. And obviously not a lot of trades to put in, and Friday normally I don't work anyway, but I'm just going to demonstrate to you how on Thursday, despite the fact that I was in a congress from like 8:30 to 8:30, like 12 hours non-stop, just with breaks in between, which weren't like really heavy, how I was able to kind of also put a trade in. Now the most important thing here is the beauty of knowing the time to trade. So if the time matches, like I said, in the members area, right? In the members area, guys, as you can see, I've got all the posts here, and you can see we're up to date until the end of March, because I did say on the 21st we're going to post all the March swing days and swing hours as well, right? So this is next week, February. That's this is actually next week, February, right? So this was this week, 17 to 21. All right, you can see all the swing days and the swing hours, and the videos I post every day underneath the hours, so you can follow it through. But today, not today, on Thursday, I did take a trade despite the fact that I was at a congress. Why? Because I knew the swing hours of the day, right? Knowing the swing hours on Thursday gave me an opportunity to get into a trade, and that was right over here. In fact, this is the euro dollar, right? So in fact I also posted that up. Okay, it was exactly at this breaking point here, right there, which was matching an hour, and it took us all the way into the closing, right? So knowing that on Thursday, you can see here where the market started. That's the New York session. Obviously I couldn't do anything there, but if you take a look at the hours, I've got here 7:25, 8:35, which is 6:25, 7:35 on the platform, because the platform is an hour behind. And if you take a look here, right, that's the 5 o'clock, okay, 5:45, that's your 6:15, 6:30, 6:45, right there. So in the market breaking out, following that all the way in there, as you can see, right? So knowing the hours beforehand was just magic. Also, this 6:40 is, let's take a look here, is 5:40. All the hours, you can see that's 3, so 5:40 on the platform is right there. Okay, it's right there, pretty much going up, because our bias was to the upside. Why? I'll tell you why. Because the swing days for the euro dollar were Wednesday, Thursday, Friday, and I said that can be a 2 or 3 day level for turn or move. So once Wednesday was over and the market had made this low, Thursday was like a natural up move. Okay, and as you can see, Friday was also a swing day because the market started swinging down, and I said to the guys in the video, listen guys, I wouldn't do any buying here despite the fact that the trend is going up and we want it to go up. You could only get into this trade at our sweet spot of 37.5. okay, we're not there yet. So that's the 50 zone, that's the 37.5, and I said you could measure it either from there, or you can measure it from the place it took off, which is there. And if you had done that, that's your 37.5 there. Now remember, once we're here, you need to check for hours as well, right? But look how the hours worked. Bang, right in there. From here, this is New York, right? This is New York morning session. Markets right here. From here, boom, going up and selling at the trading hour. This is London. Look at London, this zone here. That's your trading hour, and in London you just like bang down All right. So these hours are really important. Knowing the hours is the best way to trade, and that allowed me to actually, put in a trade in there when I had a break, or if you have a half an hour coffee break, or I don't know, whatever, you can see, well, wait a minute, this is a trading hour, can I get in? Okay, the same thing happened with gold as well, which I posted actually both in the members area. Okay, despite the fact that I had made an announcement. Okay, I said, guys, I'm going to be away, won't be able to put trades in, so just so that you know. But despite that, I did put euro, dollar, and gold in there. And gold, let's check that out as well. And as you can see with gold too, this was a trade which was covered nicely. Okay, my first target was up here. The market moved up, so I put the stops really tight so that there would be no loss if it came back down. Okay, because I wasn't quite sure. And the reason I wasn't quite sure is because we're at the tops here, right? So tops are always choppy, but if you come back to a PST level, this is why the pricing is so good with PST. If you get to a pricing, you can go long. If you don't get to a pricing, you don't go long. If you get to a pricing at the top, you can go short. But you can see this breakout is choppy. So immediately once the market moved, in fact, I took very small profits there. It was just very tiny. The market moved up, so I put the stop losses just above the entry. And when it came back down here, because the daily pivot was here, so we got in here, market took off. Stop loss was very tight even when I got in, okay? Because if the time is wrong, the market will go the other way. So your stop loss is so tight. I mean, I'm like putting $2.50 on a gold trade stop loss. That is tight, okay? And the trade immediately gets covered, immediately, and then whatever happens afterwards, that's it. See that spike up there before it crashed down, it came down, it's not a crash really, is still enough to take cover trade profits and so on. Okay, in fact I left it and went to sleep on that. So knowing the time and having a pricing model, knowing when to get in, when to trade to the hour and the minute. Look at these. This is yesterday, right? So gold, look how the market's moving. It's a trade hour, market is pushing down. It's a trade hour, market kicks up. Trade hour, market kicks up. Trade hour, market pushes down. Trade hour, market pushes down. Okay, so if you know these things, it helps you in two things. First of all, when your technical analysis matches a trade hour, that's a bingo trade. Like here, okay, if it's a trade hour and it's a daily pivot and I want to go up, my bias is to the up, that is it. You go in there with a tight stop loss. If it is not matching your technical analysis price, you don't trade it. You don't go into every hour trading, but you get specific with time and price. You use them together and you got your swing days. Look, for gold, the only swing day I had this week was Monday. That's it, just Monday. So let's take a look at Monday. Well, if I tighten this up a little bit, okay, you can see that this is Monday, right? All the way, whoops, down here. So Monday market breaks up from the lows, it starts to push up, goes all the way into Thursday, Friday retracing. So knowing the swing day, you can actually have a bias, and then you say, well, wait a minute, Monday's a swing day, we had a big crash, so let's look for an opportunity to go long. Okay, and then look how the market's going. Tuesday, market makes a dip, trade hour at the weekly pivot, pushing up, comes back. Look at the trade hours, it's always pushing up into that direction. And same here, if you're at the highs, you don't, obviously, you're not going to go for a buy, but when you match these things to your technical analysis, it just makes sense. Okay, because your stop losses are really tight and everything else is honky-dory. And on Thursday, look, trade hours here, market takes a big dip to the downside. Why? Because if you're going up for 3 days, they're going to want to push it down, fill in the gaps, And I talked about these in the videos as well. And then you see how the market is just trading at the hours. See how they're selling at the hour, selling at the hour. This is a mid zone. That's a daily pivot, selling at the hour. So all of these timings, when they match your technical analysis, it just makes sense, okay? Because your minimum risk stop loss is going to be really tight, and because you're trading with time, you're not going to stress. For example, let's say, take any time from here, it doesn't matter. Let's say I went long, okay? Let's say I went long at this hour here. Then I need to understand, look, this is another trade hour, right? So here the market can turn around as well. So by understanding that we went from one trading hour to another trading hour is enough for me to understand that let me manage the trade here. Let me push the stop forward. Let me take partial profit. If I covered the trade, let's take a bit of partial profit. Push the stop forward. If it goes the other way, we're still in profit. Understanding your U-turn timing and then the next possible U-turn timing is great for that trade management and stop loss management. So it's really important to understand that. Hope that works out for you all. All right, so I hope that makes sense. Okay, looks like I've got to go, and because I've got to do some translation as well. Hope you guys have a great weekend. All the best. Take care.